This visualization shows the official data from India's market regulator, SEBI. Out of every 100 retail traders who enter the options market, 90 of them turn red. They lose their money. The options market is highly efficient at destroying retail capital. Yet, if you scroll through social media, you see a completely different picture. You see massive profit screenshots and flashy cars, framing options trading as a quick, effortless way to get rich. Curious. But hidden inside that punishing 10% success rate is Nitin Murarka. Based on his own quantitative analysis and live market experience, he claims a win rate of 60 to 70% as an options buyer in this exact same environment. Today, he is widely known on financial television as the Nifty Marksman. But before he earned that title, he was a kid from a small village in Bihar who failed his chartered accountant exams twice. How does someone with that starting point figure out how to beat Wall Street level odds? His consistency doesn't come from luck or a secret indicator. It comes from a specific chronological journey that serves as the exact antidote to the mistakes the failing 90% make. Nitin's early career was defined by immense educational pressure. Coming from a family of doctors and engineers, he was expected to succeed. Failing his CA finals twice forced him to look for alternative ways to build an income. In 2004, he moved to Delhi and found a night shift job trading U.S. tech stocks. While observing the daily price movements of heavyweights like Microsoft and Google, he got his first real exposure to momentum and technical analysis. But the real education started a few years later at a brokerage firm called SMC Global. His mentor had a habit of buying highly complex, expensive trading books. He would hand them across the desk to Nitin with a simple instruction: read these and give me the summary. Nitin spent an entire year doing almost nothing else. He read through a massive library of advanced market theory, pulling out the core mechanics of how options actually functioned. Those summaries eventually evolved into proprietary strategies that proved highly valuable for the firm's trading desk. Most people jump into the options market with a few thousand rupees, expecting to pull out millions on day one. Nitin spent thousands of hours building a foundation of hard, theoretical knowledge before he ever expected to extract consistent wealth. If you ask the average retail trader what they are watching, they will usually list 20 to 25 different stocks. They divide their attention, making it impossible to master the specific behavior of any single asset. Nitin took the exact opposite approach. He adopted a strategy of extreme elimination. For 10 straight years, he traded and studied absolutely nothing but the Nifty Index, the benchmark of the National Stock Exchange. By narrowing his vision to one target, he began to internalize its specific rhythms. He memorized how the Nifty reacted to news, how it moved in the morning versus the afternoon, and its unique daily volatility. This graphic illustrates how he pairs that deep familiarity with hard quantitative data. He layers 3 specific metrics: the put-call ratio to gauge overall positioning, VWAP, the volume-weighted average price, to find true support levels, and real-time market sentiment indicators. He ignores the noise and only executes a trade when all 3 of these data points align. That 60 to 70% win rate happens precisely when the conditions fall into the exact center of this overlap. Mastering a single target removes the chaos of the broader market. It allows objective, mathematical data to dictate the trade, removing human guesswork entirely. Escaping the 90% failure rate requires adopting the 4 specific pillars of Nitin's mental framework. Nitin synthesized his 2 decades of experience into this highly actionable structure. Rule number 1 is survival over profit. Most beginners focus entirely on how much they can make today. Professional traders focus on protecting their capital, so they have the ammunition to trade again tomorrow. Look at this breakdown for Rule 2, the 80-20 mindset. New traders obsess over technical indicators, but Nitin assigns them only 20% of the equation. The other 80% is purely mindset, emotional control, risk management, and the discipline to stick to the plan. Rule 3 dictates the pursuit of the perfect entry. Finding a favorable exit becomes effortless if your entry point is precise. Buying during moments of severe public panic, when assets are heavily discounted, naturally sets you up for a safer, more profitable exit when the market stabilizes. Finally, Rule 4. Ignore the massive profit screenshots you see online. Start with very small amounts of capital. Spend your early days strictly observing exactly how options pricing behaves before you ever scale up your risk. The options market reliably punishes those who look for shortcuts. But for those who treat it with rigorous study, emotional discipline, and the unwavering focus of a marksman, it offers a distinct path to beat the odds.